So in today's masterclass, we're going to be taking a look at asset classes. So what are asset classes? Well, asset classes are different kind of areas of the market with which we can invest our funds or trade our funds for hopefully profit. So we're going to take a look at the different differentiations between different asset classes and different things that we can trade and invest in. So what to trade? As different asset classes. Well, initially we're going to look at stocks, shares, equities, and also equity indices. So what are these? Stocks, shares, equities, and equity indices. Well, stocks and shares, equities are all to do with ownership of a company. Ownership is the primary thing that we talk about when we're looking at a different stock or a different share. It's actually taking a part of a share, a part of ownership in a company, which then gives us voting rights within that company. And alongside with that, with voting rights, alongside just getting capital gains, what we can see is also we get an income, and that income from stocks, shares, or equities comes in the form of what is called as dividends. It's the profits from those companies given out to their various shareholders. So that's stock, shares, and equity indices. Okay, and examples of this will be ANZ Bank, Telstra, and also Amcor. So these will be examples of different companies, equities that we could invest in. So here's a daily chart we see of Amcor, so going through a good run at the time of writing here on the time of videoing, and here running up into the middle of 2018. So that's the daily chart for Amcor, and here we can see the daily ASX 200. So this is an index. This is the top 200 stocks in the Australian Stock Exchange, and in here we see we can benefit from the different moves that we have in the ASX 200 price. So those are stocks, shares, equities, and equity indices. Second one we're going to look at in here are bonds, government bonds and corporate bonds. Bonds are seen as more stable than equities and indices. They're either backed by government or by corporates, and they're effectively debts. They're effectively debts from the companies and loans to those companies. So it's trading debt. They're seen as, I say, more stable with reduced risk, usually in comparison to equities, and you get a fixed return on these. So a fixed return on corporate bonds or government bonds, which is given from the coupon. So it's a fixed return, and often we're looking here rather than capital gain, we're looking at income growth. Okay, from here, for income growth rather than capital gain. Next asset class we're going to take a look at is commodities, the commodity market. So what are commodities? Well, commodities is real things, real stuff. So we can invest in maybe base metals, examples of which are copper, aluminium, lead, zinc, those kind of things, base metal markets. We can look at precious metal markets, gold, silver, platinum, all included under the precious metals category. So here's a chart with gold. So more recently in gold here, gold been selling off at the time of writing here and publishing at 2018. The market's selling off from 2012-13. More in a consolidation but selling off. So you can benefit from either the moves higher or lower in the gold price. Energy is the next commodity sector we're going to look at. Oil and gas, and here we see the daily crude oil chart in here. More if anything at this time in here going higher in price. So a rally in the crude oil price at the time of videoing. So certainly being able to benefit from the various swings in the market, or maybe just on a buy and hold for a longer term bullish view on crude in this particular case. So we've seen energy sector and an example here of oil. And finally, you can trading agricultural products as well. So agricultural products, coffee, wheat, sugar, things like that as well. So there's agricultural products also come under that commodity basket. The next and final asset class we're going to take a look at is foreign exchange markets. So we can trade the foreign exchange markets in here. So foreign exchange, also known as FX or currency markets in here. We have the major currencies, euro versus dollar, dollar versus yen, pound dollar, dollar Swiss, Aussie dollar, New Zealand dollar versus US dollar, and US dollar versus Canadian dollar. Those are called the majors. And then we have emerging markets currencies like the Chinese currency, the Brazilian real, the Indian rupee. So we have other currencies we can potentially trade, potentially more risk with these emerging markets currencies. And here we have an example of the Australian dollar, more in a decline in here through 2018 on this chart. So in today's masterclass, we're taking a look at what we can trade. We look at different asset classes: stock, shares, equities and equity indices, bonds, both government and corporate, commodities, and foreign exchange markets. This has been Steve Miley for The Bull, and please do join us again on thebull.com.au and thebull.asia. Stay bullish.